What's up, you dirty little day traders? Just wanted to jump on here for a minute and take a look at Bitcoin. We're seeing that move we were discussing playing out and just wanted to highlight some key areas, make sure that everybody's up to speed. Before we get started, obviously none of this financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. If you use this information for anything other than entertainment purposes only, you're going to end up living in a van down by the river. But given the current housing market, I know for a lot of people that would actually be a step up. So you do you, boo. That being said, essentially we got our Bitcoin spot market chart, and then we also have that Bitcoin futures chart, and it's definitely worth paying attention to both right now. So if we just flip over to the candles here on the Bitcoin daily chart, we see we are basically finding support on the 200 exponential, and then we're breaking down from that level. It's already flipped back red again, so we know as long as we're between the 200 exponential and the 200 simple, the market's basically neutral. Now, leading up to that, we're in a clear downtrend, so this is an attempt of the bulls to save that trend, reverse it, and flip it back into a bull trend. And obviously, right now, it's not going well. So that being said, now that we've lost the 200 exponential, the obvious target, like we've been discussing over the last week or so, is the 200 simple. So currently the 200 simple is sitting at about 19,700. So just call it like that 20K level roughly. And we have quite a bit of support here on the horizontals when we consolidated before breaking down to that macro low. If we just pop up our indicator oscillators real quick, it's not like we need to use rocket science to figure out investing, air quotes, in Bitcoin. We're just going to use some basic indicators that work extremely well instead. So in this case, we had that bearish divergence between our 2 points here, and it corresponded with one of the most reliable signals that we ever get in all of existence, which is obviously when the histogram of the TDMACD bangs its head on the slope line when it's still blue after we've broken down below it. So now we see that playing out in real time, and that resulted in this bearish divergence rejection that took us back down to support. And now that we're losing that support via the 200 exponential and what amounts to a neckline, it looks more and more like the double top that we've been calling out, and the measured move should take us right down here to that level. So again, quite a bit of confluence around that 20K. Now the problem is when we get down to 20K, it's likely to act as support and going to be a good scalping opportunity somewhere around that level. But the truth is, we need to get back above the 200 exponential at some point in time. So really, the new range will just be, as long as we're above the 200 simple, it looks okay. But as long as we're below the 200 exponential, it doesn't look great. And we're basically neutral on price action. I would expect it to essentially act as like a sideways channel. But the thing that really matters is the direction of the break below or above those levels, because that's going to potentially determine the predominant trend going forward. You can build a strong fundamental case for Bitcoin in a bullish way or in a bearish way. And honestly, I'm not here to argue that today. We just want to look at the technicals and see what's most likely to happen. So now that we have our areas laid out very clearly on the Bitcoin spot market chart, 19,650 and 21,800, let's jump over and take a look at the futures chart. So we're just going to kind of zoom here and pay a little closer attention. Obviously, the 200 exponential on the futures chart is 23,565, and we're already testing the 200 simple down here at 20,920. But the thing we really want to pay attention to, if we turn on our drawing tools here, we have this air pocket that we've been discussing for some time. And essentially all that air pocket is it's just the gap from where the futures market closed on Friday to where it opened on the following Sunday. And because the spot market moved over the weekend, the price left this gap behind. And we know that gaps, much like moving averages, act like magnets and pull price to them or propel them away. So if we lose support right here and we enter into that gap level, aka what we like to refer to as the air pocket, more likely than not, we're going to come back down here and fill the gap or close the pocket. And that takes us to the bottom of the level at about 19,520. So realistically, we have 19,520 to watch on the futures chart for closing the gap, which seems like a likely target now. And then we also have on the spot market chart, 19.7 is basically the 200 simple moving average and our target. So when we get down to that level, I'm looking to buy for a quick scalp move. I don't know how much follow through we're going to get, but to tell you the truth, losing the 200 exponential and simple moving average is bad. And right now, because the futures and spot market 200 moving averages and some of the other support levels don't line up perfectly, we have to really look at both of them. While we don't have confluence from those two charts, we need to respect both of them and keep watching them until they do line back up again. If both of them are telling us the same thing, it's much more reliable than if one is saying things are bullish and one is saying things are bearish. So we're at some key support right now. I do expect this area to hold at least temporarily. We'll see how much buying comes in and if we can sort of get back off this level, or if we're just going to go straight down the rest of the way and test the 200 simple on the daily. Here on the futures chart though, if we do zoom back out, we can see that this is actually a key Fibonacci level as well. The green 382 is one of the important levels we've been discussing, because that is basically the macro low from way back here in December 2018, as where the white fibs are the Rona dump low. Both those levels have acted as key support and resistance along the way, so we do want to keep watching both of our different Fibonaccis as well as the various moving averages on both the spot market and futures market as well. If we zoom back in here though and pay attention, the very most important thing, let's just say Bitcoin completely fell out of bed, closed the gap, and just kept going down from there. Holding the white 0.5 is very, very important. If we break down below that, we're going to be losing this sort of ascending support line here in green, and then also we'll be putting in new lows. In the meantime, we currently have a low right here and then pushed up and put in a higher low, and then that led to us pushing all the way back up and retesting the 200s. So even if we get rejected here, we end up breaking down and get the measure move of our little double top formation. We lose the 200s, we close the gap, all that bear stuff happens. Actually, if we come down here and we just hold a higher low, that to me actually looks pretty good. And then consolidate, push back up, and potentially break through the 200s again and continue building a constructive uptrend. Now, obviously, that doesn't have to happen. A lot can change in the meantime, but I don't want to necessarily get overly bearish or overly bullish at the moment when we're this close to the market just telling us for sure. So just flipping back over here to the Bitcoin daily chart, and this one is the spot market. There is one more thing I wanted to talk about before we go. Come in close, I'll whisper it to you. This is not financial advice, it's not your financial advice. These markets are extremely volatile, so please do your own research and trade responsibly. All right, later.